So I've been in the business for close to 21 years now, and without a doubt, been one of the best lenders I've ever worked with.
Jack, that's bullshit.
Nah, it's 100% accurate. So I want people to get to know how awesome you are. So I'm here with Tim. Tim is the president of Note Mortgage, and tell us a little bit about where it all started. Where are you from originally?
Originally, Jack, I was born in Canada.
Okay.
A small city called Moose Jaw, Saskatchewan.
Moose Jaw?
Yeah, it's known for hockey players. We pump
Okay.
out a lot of NHL hockey players out of there. But yeah, I lived there for 17 years. The day I graduated high school, I moved out to a city called Calgary,
Okay.
Alberta. It's
How far is
more
that?
in the mountains, 8 hours west.
Okay.
So where I grew up in Saskatchewan is just north of North Dakota. Calgary is just north of Montana. If you take the 15 straight north,
Okay.
you hit Calgary.
What was the reason for the move?
So I used to do what's called freestyle skiing. So I was did an event called Moguls, and they had aerials as well. And I was kind of a bit of an animal on skis.
Okay.
And so I was shooting for the 88 Olympics, never made it, but I was on a pretty highly competitive team, and so I did that for a number of years. And then in 1993, I moved to Miami. And I worked for Carnival Cruise Lines. I managed the liquor. I was kind of like the mayor there.
Okay.
Yeah, in between that, I went to school. I was skiing. I went to Mount Royal College. I studied finance. So that's kind of what got me into this. After that, I moved to Tokyo, taught English.
You got to slow down. There's a lot there to unpack.
There's a lot,
oh my
bud.
goodness.
But yeah, I moved to Tokyo. I taught English there, bartended for a short time. And I got hired with a Canadian company, moved back to Canada. And during this whole time between the cruise line and traveling, my best friend that I grew up with was dating this girl, and they had met on the cruise line, and she's a professional dancer and been trying to set me up with her best friend. And I was pretty busy doing my thing, but at one point I was in Toronto and on business, and I decided we'd go meet each other. So I flew to New York, met her, and fast forward, we got engaged within 6 months, got married, and actually be 30 years next year.
Wow.
So Tiffany danced in New York City. She did.
You're going too fast here. We got to unpack
Okay.
all this.
Well, we'll get there.
This is
That's what brought me here.
Dos Equis might have a new most interesting man in the world.
I don't know about that.
So let's go back to Canada first. So when you made that move, was there more snow there? Or what was the reason that was going to help that?
I grew up in prairies, so it's farming communities.
Okay.
So there wasn't a lot of competitive ski hills, where if you go to Calgary, there's a training facility for the Olympic team.
Got it. Okay. So did you have any animals on this farm?
No animals. I didn't live on a farm, but my aunts and uncles, we grain farmed. That's what we did.
So what was the reason for the move to Miami?
So Miami, I just wanted to travel. So I got on with Carnival Cruise Lines. I applied with them, sent in a resume three times a day. I would call them twice a day. And after about 4 weeks, they got sick of my calls. They hired me. It's the first time I was on an airplane, and I was 23 years old, and I flew to Miami, and I started working for Carnival Cruise Lines.
So that was only because you wanted to travel? That's what brought you to the States?
Yep.
Nice. Okay. So where would you guys go on the cruise?
So everywhere east of Miami, you name it, name an island, I've pretty much been there. Yeah, I did it for a couple of years. So in the summers, we were docked up in New York City, Pier 52, and we'd sail up through Boston up to Canada.
Okay.
And then in the winters, we'd St. Thomas, the Bahamas, Puerto Rico.
Nice.
Yeah.
So what did you think of the States compared to Canada?
Yeah, I mean,
first
at the
got here?
beginning, wasn't a huge fan. I really
You weren't impressed?
Really like Canada. I mean, if I'm being honest, the girls definitely are better down south.
Okay.
And Miami is incredible. But yeah, I love the States. That's why I'm down here now.
All right.
I wouldn't live anywhere else.
No. Yeah. So when you met your wife, it was a blind date?
No, we got set up through my best friend and her best friend. So Joel, my best friend married her best friend. So we got set up.
Okay.
Long story short, when I was in Toronto, I flew to New York to meet her. We had been talking on the phone here and there. And we got.
So she was in the States before you moved here?
Yeah, she grew up in Connecticut and danced in New York City. So that's where she's from. And so I lived there for a year. That's what got me into the mortgage business. Her uncle was high up at a bank and got me into mortgages. And so I lived in Connecticut, worked in New York, and I really didn't like it at all. So, she got an audition with Siegfried and Roy. It was a tiger and cat show. Not many people know what that is these days, but it was a pretty big show back in the day.
One of the biggest.
Yeah, and she was a performer in that show for many years.
So that's what brought you guys to Vegas?
Yeah, that's what brought us to Vegas, was that show.
Okay. Was there any stop before Vegas or?
No, that was it.
Nice. Did you go watch the show?
Yeah, of course.
All right.
Many times.
That's pretty awesome. I was actually pretty sad about it. I was showing some new builds probably 3-4 months ago, and they tore down their house and built some new homes there, and it was sad to see that. Sad to see that go.
Yeah. Was that the place by the golf course?
I guess they have two places, but this one is across from the Santa Fe Hotel.
Yeah. I've been to that house.
Have you?
Yeah. It's it's sad that they take that down. Yeah, Tiffany got to go, and if they had kittens and stuff, because she did little things with them.
Yeah.
She was one of the ones that got to go there.
So you had Thanksgiving with them, hung out with them?
No, but I have been there, yeah.
Okay. Nice. How cool was it?
Pretty cool. They're cool guys. Honestly, they're legends, hard workers.
Yeah.
It's great to see their success.
Yeah. Speaking of hard workers, you're probably one of the only lenders I met who will get up during dinner, during a hockey game, anytime to answer their phone. What got you so passionate about the business?
Yeah, I mean, I grew up there's 5 kids in my family, and the one thing my dad taught me was just wake up every day, lead by example, just do the right thing. It's that simple. And I've always just busted my ass. That's just what I do. So I feel like if the agents that are working with me are working, I'm working. So it just turns out that, I didn't get a vacation for my first 12 years.
Oh, wow.
So my family has probably paid the price a bit. I mean, they've definitely reaped the rewards as well,
Right.
but they've definitely paid the price. But yeah, I know people say they put in an 80-hour work week. I legit put in an 80-hour work week.
Oh, I believe it. I've seen it.
30 years of doing this shit.
I believe it.
Yeah.
Why does that town produce so many hockey players?
Yeah, there's not much to do, right? We have the keys to the rink. So like in my graduating class in 1986, 5 guys went to the NHL that year.
Wow.
Out of 99 kids.
Is it that cold out there, or is it?
It's cold, Jack. It can be minus 40 plus wind chill.
Oh my goodness.
But what's cool is you don't know any different, right? I didn't get on an airplane until I was 23, so I didn't know any different. Our vacations were in a camper. We'd go down to like Seattle, Spokane, that kind of thing, but never anywhere where there's palm trees.
How long is that winter?
So I was just there this weekend.
Was it cold?
It's getting dark at 4:30 now.
Okay.
Wasn't bad. It was minus 10 Celsius.
Wasn't bad.
Minus 10 Celsius. That's like, I'm guessing like 20 degrees Fahrenheit. It wasn't bad, but it'll get to minus 40.
That's insane.
Yeah.
How do you drive cars?
Yeah, you do. Just let them warm up a little longer.
Really?
Yeah.
Do you have to park in the garage, or? I've never been around the snow.
We didn't really
like
have
that.
garages where I live, but yeah, people do now, and they're heated.
That's wild. So you ended up in Vegas. We went from Miami, New York to Vegas, and you stayed in Vegas the whole time?
Yep. We went to Dallas for a short stint, just for a couple months.
Okay.
And we came back. That was in 98.
What took you to Dallas?
I had an opportunity with an aerospace company, but yeah, I want to get right back to loans pretty quick. So we lasted 2 months.
Aerospace. That sounds serious.
Yeah, my father-in-law was in that business, so I was getting into sales with them. But I think I'm more designed for what I do here.
Okay, so you always love the mortgage business. So what is the hardest part about the mortgage business?
Yeah, it's hard to put your finger on one thing. I would just say, just consistency. Mm-hmm. You have to be available 24/7. If you're not answering your phone, Chase Bank is. Mm-hmm. And that's kind of the way I look at it. I typically start my days at 5:30 in the morning every day. I'll clear emails. Rarely I'm making calls that early, but there are times I do. And then I go for a walk. I typically walk 3 to 5 miles every morning, do stretching, breathing exercises, trying to keep my heart rate down. And then I go in and I get abused.
So that's your morning routine?
Every day, yeah.
And it starts at 5:30?
5:30.
Okay. Do you take the dogs with you when you walk?
I used to. They're getting old. So, yeah, it's just me now.
Do you see any of the dogs in the neighborhood that early in the morning?
It's funny you say that. I don't know any of my neighbors' names, but I know every dog's name.
Really?
I see a lot of dogs. Yeah.
How do you see them? They run up to the fence, or you see them walking with their
they're all
owners?
walking. Yeah.
What's your favorite one?
I'd hate to single that out, but
Okay. So you like
I
them
like
all.
wiener dogs.
Wiener dogs.
Yeah.
I had one too. They're an amazing
Yeah,
dog.
they're pretty good.
Yeah, I have a 5-pound Chihuahua and a 220-pound Spanish Mastiff, and the Chihuahua bosses the
Jack,
Mastiff
you got a
around.
fucking petting zoo at your house.
I know. That's why I was looking for somebody to watch the animals when I go out of town, but it sounds like you don't work on the farm long enough for that.
I've done my time.
Yeah, sounds good. So I guess the hardest part about the mortgage business is being on all the time. There's no really time to shut it off.
I would say that is a challenge. It's the one thing I've struggled with my whole life is to have a balance with my family and work. Obviously, there's a lot of products in what we do, right? We've got a lot of warehouse lines. We have paper lending, conventional, FHA, VA. We have non-QM. We have private money. And these guidelines are constantly changing. So it's that.
What's non-QM for people who don't know?
Non-QM would be a non-qualified mortgage. So let's say that you own a business. You do make good money. You make $250,000 a year, but you write off $225,000 a year. So your adjusted gross net income is at $25,000.
Okay.
You're not going to make enough to buy a pack of gum, let alone a house. So we have programs now for the people we know they're making the money as long as they got good credit and they eliminate the risk with a larger down payment. It's a non-qualified mortgage. It's non-QM. So we have bank statement loans, P&L loans. All those programs have all the different guidelines. Then you've got FHA, which is really, for people who don't have the strongest credit, but a low down payment. It's backed up. It's a federal housing authority. A lot of guidelines there. It's pretty consistent. And then you got VA for the veterans, and you've got conventional mortgages.
How long have you been doing it total?
It'd be 30 years next year.
Wow. How has the industry changed in 30 years?
Yeah, it's changed a lot. I would say probably after the market crash of 2010 when Frank Dodd Act came in. Prior to that, it was just very minimal paperwork. You could crank out a lot of business without even having an assistant. Now, I've got multiple assistants to crank out half the volume. But we've also lost probably 90% of my competitors, right? And I don't know the exact numbers, Jack, but I would guess around 2010, we had about 38,000 registered loan officers in the state of Nevada. I think we're down to just under 4,000.
Wow.
So 90% of my competition's out just because there's a lot involved. It's a lot. So
did the numbers decrease after that crash in 2010? Or?
Yeah. More people. You had to get regulated. You're licensed. There's a lot of factors to it, but it's also a lot of work to get a loan start to finish. And by the way, I agree with a lot of guidelines they have in place now. Is certainly a lot different. You're in it, right? You see, there's a lot of paper to go through, and honestly, it's there to protect the consumer and their purchase. And I agree with almost everything they put in place. It's just a lot.
Yeah. Yeah, I remember in 2010 when everything crashed, you would be able to just state how much you make, state how much you have in the bank, and just take a higher rate, and there's your loan. Yeah,
I never really did any of those loans. I always knew it was kind of a bad deal.
Really?
And honestly, we could have made almost double, almost triple our commissions. I've never done any of those ninja loans. It just never felt right. And that's one thing I've done. And I think that's part of my success is I've stuck true to my heart. And I just know it wasn't putting people in good positions. And everything has checks and balances. And we knew this market was coming. They got checked. A lot of people got hurt, but there was a lot of greed back then too. So yeah, I take a lot of pride that I never did a single loan like that.
Did the way mortgages, besides all the documentation and everything you need now, did anything else change? Is it the same amount of down payment you need for a house? Any of that change?
Yeah, I would say it's been consistent.
Okay.
I would say we go through waves where we've gotten aggressive products where you have the 100% financing. Nowadays, you can get 100% financing with down payment assistance programs. I would say it's been pretty consistent throughout.
Okay. So home is possible. There's a lot of different grant programs out there. So somebody can come in with no money down using the grant program, try to get the seller to pay closing costs. VA is typically 0% down.
Yeah, to me, that's one of the best loans out there. Is for the veterans. They've done their time. They've done their service. It's a really good product. You can truly get in with zero down if you can get the seller to pick up closing costs. You get up to 4% seller contribution. Rarely are they coming out of pocket more than $1,000.
It drives me crazy to see a lot of agents and probably lenders too pushing veterans off that program to go more conventional when VA was made for the veteran.
Yeah, I've never done that. It makes no sense.
Are they just really intimidated by the process, or?
Yeah, I mean, there's more involved on VA. You don't have much control over the appraisal. It's a little different, And I think people a lot of times just take the easy way out. Yeah, no, the zero down with VA, no mortgage insurance. You've got your VA funding fee, but that can be financed. To me, I think it's an incredible loan.
Or if you're a disabled vet, that potentially that could go away too.
Yeah, if you've got disability, depending on the percentage of the disability, that funding fee goes away.
And what about conventional? What's the lowest percentage down?
Yeah, so with us, with the investors we have, the lowest down would be 3% down conventional for a first-time home buyer.
Okay.
And then typically most people put 5% down. Ultimately, your goal would be to put at least 20% down to get rid of the mortgage insurance.
So conventional, you can go as low as 3, but it's got to be your first house.
Yeah. Yeah, with our products, that's what it looks like.
Nice.
And then we do have conventional down payment assistance. So you can go conventional with zero down, but you're not getting that down payment assistance. It's not free. You've got to pay it back.
Yeah, a lot of times when, we have clients who insist they want to go with their bank and, they have a big bank they banked with for a while, 9 to 5, Monday through Friday. After that, it's impossible to get a hold of anybody. The fact that you're always answering your phone, to me, is just, you just don't find that with lenders who are available 24/7. And when you're going through my side of things, when transactions get messy, being able to communicate with your loan officer is just, it's mandatory. And how do you guys get your deadline so quick? I mean, with contingencies, sometimes I have to tell you to slow down, where with other banks, I've had to tell them what's going on. We're risking our clients' earnest money. And with you, I do the opposite. Slow down. We're not ready yet.
Yeah, I take great pride in that our average closing is 18 days.
Wow.
To get to clear to close. It's a lot of work. But as you know, Jack, we invest an average of 6 to 7 man hours up front and doing a full underwritten loan approval up front.
Okay.
Most people are going to throw a dart at the board. They'll get a credit report, ask a couple silly questions, and send an approval letter. And they don't really care. They're not the realtor out there showing homes for 30 hours. It doesn't cost them anything. Where we take great pride and we give you that letter. When have you ever seen one of my letters not fund?
Not one time in close to 20 years. Yeah.
Because we do all the work up front, right? Our clients are fully vetted, and that's carried a lot of weight in this market, right? Most people, a lot of these listing agents know me in town. They know that what I do up front, and it's money in the bank. And on top of that, we're closing quicker than cash consistently, right? Anybody, if you're closing a deal a month, anybody can pull a rabbit out of a hat, right? But to consistently do it with the volume that we do, day in, day out, I take a lot of pride in that. But yeah, we fully vet our clients, and a lot of clients push back. The other guy didn't ask for tax returns. The other guy didn't. Yeah, well, where's that lender going to be when you lose your earnest money because now you don't qualify, right? So we do it really for 3 main reasons. Number one, we want to make sure you qualify.
Right.
So you're not wasting your time showing homes to somebody for 3 weeks when they don't qualify. Number one. Number two, we want to make sure that they're comfortable with the payment. So we want to get them approved and go over payments with them.
Right.
So they have an accurate target of what they're going to feel comfortable with. And number three, they're going to close. There's nothing more embarrassing to tell your friends and family you bought a house and then 2 days before you're moving in, you get declined and you could lose your earnest money, right? So I've got nothing to gain from that.
Yeah.
Just do it because it's the right thing to do.
So, for real estate agents, if they're showing houses to somebody for weeks and weeks and then they're not even approved, that's frustrating. For the client, it's frustrating because they're so excited just to find out they can't get a house. What's the difference in that process? Somebody can go online and get pre-qualified in 2 minutes. Why is that process different?
Yeah, so there's 2 ways to do it with us. You can apply online. You can also... I can have one of my team members give you a call and do the application over the phone. Once we have the application, we're going to run your credit. And we run all 3 bureaus. We look at everything. Based off the application, we send you a tailored list, not just a bunch of things to send in, a tailored list based off the application so we can verify income, assets, and identification. And, 7 to 10 times people are good, but 3 to 10 times they're not, right? The guy may very well believe he's making $200,000 a year, but he didn't realize he's writing $140,000 off.
Right.
And his tax exposure, he's paying taxes on $60,000. That's what we use for income. So in his head, he thinks he's qualifying for $1 million home, but in reality, he's qualifying for a $300,000 home.
Is that what DTI is?
Yeah, your income to debt ratio. So for example, if you make $1,000 a month in income, most programs will go up to a 50% DTI or 50% of your income. So they'll allow $500 in monthly bills per $1,000 earned. So if you add up your car loan, your student loan, your credit cards, and your mortgage, they can typically go to 50%. Now, obviously, in some government loans, we can go to 57 or 62, depending on the program,
Okay.
with good compensating factors. But again, it's hard to break that down. There's a lot more.
Yeah. So that's kind of is going to not only dictate your down payment, what kind of program you go, it also dictates your debt to income and what everything else looks like. So it's really tailored to that individual. So you almost have to hear the whole story before you could say, this is the program you should go with.
It also affects your pricing, right? If you got a debt ratio below 34%, you're getting a better interest rate versus someone who's got a 44 or 49.
Okay.
You're getting a better interest rate if you're putting 25% down versus 20% down. You're getting a better interest rate depending on the program if you got a 760 credit score versus 680. There's all these factors that go into play. How much is your mortgage insurance? Right?
Yeah.
If we run your credit and you're pulling a 680 score, your mortgage insurance is going to be a lot different than someone who's pulling a 760 score. That could affect your payment by $300 a month. Right? So all these things are very important to get ironed out up front. So there's no surprises once you find the home of your dreams.
What if they're checking their credit score on one of their apps? Is that accurate? Experian?
You know what? It's good. It's good to see where you're at. What we got to run is a level 4 RMCR. Typically, the reports you're looking at online cost less than $1 to run. The reports that we run now cost $95.
Oh, wow.
Our scores are typically about 25 to 30 points below what you see online.
Okay. So that's a good average you guys take the middle score. Is that how it works?
Yeah, there's 3 bureaus. We take the middle.
Okay. What's the hardest part about the mortgage business?
For me now, I think the biggest challenge is just a lot of lenders out there just are not honest. And when you are honest and you're trying to give the true numbers up front and you got a couple clowns that are starving and they're telling them a rate that doesn't exist, or they're giving them paperwork and they're asking for 2 things knowing they need 30 things, but they're just trying to get the deal. And they can go to bed at night knowing they're going to get a curveball a week before closing. That's probably our biggest challenge is just dishonesty in out there.
So is that almost like I'm a lender, I don't have much going on, so I'm going to gamble on this, tell them they're approved, give them an approval letter, but really try to figure out how to get it closed within the 30-day escrow period?
Happens every day. And their quoting rates that just don't exist. What these guys do, like even if you go to a big bank, right, you're dealing with a bank teller. Typically, when they quote a rate, they're going to assume you have a 760 credit score, 34 DTI, you got 2 years liquidity after closing. They give you the best of the best, but the majority of the time they're going to whack you a week before you close, quarter point, 3/8. There's no magic rate out there, right? We all pretty much have very similar rates, but there are people out there that are going to quote what they want to hear, and then they've got no problem hitting them up right before closing. If you ever look at my reviews for 30 years, I can look you in the eyes and tell you, when I tell you you're locked, it's what we deliver.
That's awesome.
You ever seen a change in ours in 30 years, Jack? Well, you were when you were 20. Have you ever seen it?
That's why I'm sitting with you out of those 4,000 other loan officers there. I think it's the shadiest for me. I think it's the shadiest part of the transaction, because for me, I get paid a certain amount. I feel like with loan officers, it can go a lot of different directions. So it has to be somebody that they could really trust with their finances to put them in the best position. And I feel like you always do that.
I just wish people could wake up and do the right thing every day, Jack.
Yeah.
It's not that hard.
What's your favorite part about the mortgage business?
Favorite part is selling the deal, because we don't offer checking and savings at our bank. So I'm up against always at least the client's bank, right? When they go to wire that EMD, those bank tellers are trained to find, you're buying a house, let me offer you our rate.
Right.
The biggest thing I like is being able to sell the deal, showing that I've built the trust, I've done all the right things up front. Obviously, it's great when I'm cleaning up someone's credit or helping them with their credit, and we've been working together. Like, there's some of your agents, Jack, I worked with them for 2.5 years to get them to be able to be in a position to buy a home. So that's exciting. The older I get, I kind of celebrate. I'm learning to celebrate every win. Yeah. Before, it's just honestly, and it doesn't look good on me, but it was a numbers game. I just had my head down and grinded it out. Now, this last decade, I would say that I'm emotionally invested with the clients.
That's awesome. Yeah, I see that. I see you really enjoying that. We just had one recently. One of my agents came in my office. I think it was even yesterday. Was super excited because you've been working with them since February to clean up their credit and get them in position. So that's nice to see that just because somebody can't get a house now doesn't mean they can't get a house, period. So it's nice to
those
see
particular
that.
clients, remember when they came in, the only program they'd qualify for was 30% down. And we worked with them to get their credit cleaned up. You had an aggressive realtor that ended up getting all their closing costs covered with down payment assistance. So they're literally going to be coming out of pocket less than $1,000.
That's incredible.
And they just followed the program. It's not that hard, right? It's just a matter of people taking initiative and being serious about it, right? Everybody at one point wants to do it.
Yeah.
But they just don't take the initiative to do it.
Yeah. I mean, those are my wins. I love hearing those stories. And like you said, we have our agents who 2 years, later are getting, the transaction put together. And for us, it's a lifetime relationship. We have 2 parties a year for our clients. For us, it's just, it's not that one transaction. It's hard to see that in our industry. Do you guys have a system where you keep in touch with your clients for refis? Because it looks like, with rates improving, we were just close to 8, almost feels like a year ago or a year and a half ago, where now maybe next year we'll start seeing in the high 5s or something like that.
Yeah. So I don't necessarily go after the refi market. I try to be available for my real estate agents. I've just really worked on the purchase market, but we do a newsletter every month to my past clients, keeping them educated on the market.
Nice.
And majority of them will come back for a refinance when it makes sense. And yeah, we were selling rates just over a year ago at 8 3/8. And today, we're locking in government at 5.75 and our conventionals at 6 1/8. I do think we're going to get a little bit more traction here, but I think things will probably settle around that 5.875 for conventional. Again, it's impossible to predict interest rates, right? It goes by mortgage-backed securities, a yield on the 10-year. There's a lot of factors in that. The good news is we're finally getting some good job numbers, some true numbers, because I think they've been skewed for whatever reason. I don't want to get political with you, but the job numbers have been skewed for a long time. And all of a sudden in the last quarter, we've been getting true job numbers, and all of a sudden all the rates are getting the proper traction we deserved, right? So I've subscribed to a guy by the name of Barry Habib for over 20 years. And these guys are on Wall Street and they follow the markets for us. And so I do a 10-minute call every morning with these guys, and they're really strong on predicting short-term mortgage rates, and they do everything for us. And so that's one of the main tools I have. Is I don't have 4 or 5 hours a day to follow these markets, but I get tuned up in 10 minutes. We get texting every hour on the market, looking at the yields, and we try to pull the trigger at the right time. Again, you can never time the market, but it's good to be educated to pull the trigger on a lock for your client at a fairly accurate time.
What's when you meet somebody and they hear that you're in the mortgage industry, what's the first question they ask you?
Yeah, honestly, Jack, if I'm being honest, I don't tell people I'm in the mortgage industry. It's embarrassing. I don't know if you've been to mortgage conferences and stuff, but I hate to say it, but I to this day, I'm still embarrassed. I say I'm in banking.
Yeah.
I don't really tell people I'm in the mortgage business. I just feel like, I don't know what to say on that, but yeah, I don't really tell people that's what I do. I just say I'm in banking.
It's funny you say that, because I started my team 5 years ago, and I just wanted to create a bubble of how I, was dreaming the industry to be. So I'm almost in like my own little bubble, because I feel like a lot of agents I meet are in it for the wrong reason. So it's funny that you say that, but if I was to guess, I would have guessed that the number one question would have been, what do you see with interest rates?
Yeah. So the people that know me that are in my circle, that is for the last 3 years has been the topic of conversation. And I do my best to give them the best answer I've got. But as you know, there's shifts constantly. It's a little better now, but for the longest time we had wars going on. It was just a very volatile, like I said, 30 years in this, I've never seen a market so volatile for so long. But I do think that we're through it. I see the light at the end of the tunnel, and I really truly believe that 2026 is going to be very strong, and I think we're going to come out of the gate strong. But by Q2, we're going to be all in a great position. It's the perfect storm with our inventory. That's the whole thing, right? It's frustrating with dealing with people. 2 years ago, they're complaining about the rates, and there's no inventory, and then it was the election, it's this, it's that. Well, this year we got really low rates. Yeah. We got a ton of inventory. The lockout is over. Yeah. And people are still kicking the curb. And I just really believe in the next 45 days is going to be the window. Yeah. And I think the market's going to go. Yeah, it's super frustrating. And when it's going to go in a positive way, Jack, meaning that you keep on hearing some of these clowns online, the market's going to crash, there's this and that. They don't understand the checks and balances in place. There's no reason for the market to crash. It's standard economics you learn in high school, supply and demand. There is a major demand and there's little supply. And I don't see that checking for a while, right? And yes, prior to 2010, anybody could buy a house. Everybody really since then has been fully vetted. And you don't have the guy flipping fries at McDonald's that bought 10 homes stating he was making $1 million and buying these properties, right? Everybody buying has been fully vetted. We look at bank statements, your pay stubs, your tax returns. We verify it through third party. There's really no getting around anything anymore. And yeah, we do have the non-QM, but those guys are also fully vetted with a higher amount, right? If you put 20 to 25 or 30% skin in the game, the odds of you walking away, even on a market correction of 40%, is slim.
Yeah.
Right. And that's why we're not seeing that. Now, obviously, people are going to lose their jobs. The economy is a lot worse, I think, than how they portray it out there. But that news is still coming too, right? I don't know. There's just so many politics out there. And I don't want to get into the media and what they play and what's true, what's not true. But I see it. I got my boots in the trenches. And unfortunately, the public's just not getting the truth.
Yeah, people have looked at me crazy before because I've told you many times I'm not looking forward to rates coming down. You know, when I say I like them higher, it sounds weird, but the reason for that is because I feel if the rates come down really low, prices are going to go up. And that's going to cause problems for buyers who right now currently are getting possibly closing costs paid for, which helps a lot, right? You see closing costs can be 8 to 12 grand, sometimes 14, sometimes more, depending on price. You can get the seller to pay for that. There's different things you can get where if rates go down tomorrow way low, it's going to be a feeding frenzy out there.
You're not wrong. And I think the biggest thing on the plate right now is affordability, right? My first house, I paid $155,000 for it. And I was actually sweating bullets. How am I going to afford this? Now, I don't think I can buy a car under $155,000.
Yeah.
Right? It's changed. And I'm seeing more and more what I never saw at the beginning. So one thing that has shifted is multiple buyers, right? You'll get a kid out of college and more times than not, the parents are going to co-sign for them, which was never a thing back then. Or you're seeing big amounts of gift money so they can afford it. But dude, I had to decline an optometrist. He had $450,000 in student loans. He couldn't afford to buy a condominium.
Yeah.
Right. So it's definitely a thing.
So rates will help with that.
Rates are going to help, but it's not going to be the answer. I think what it's going to help, Jack, and it needs to help, is there are people that are sitting with a really nice home, but they've had more kids. They need a bigger house, and they're sitting at 3.75. They don't want to make a move to 8%. It makes no sense.
Right.
But we start selling rates under 6% at 5.75. I think they're going to swallow that.
Makes sense. Yeah.
They're going to sell it.
More inventory.
They'll move up, so there'll be inventory with the house coming, and they're going to pull the trigger on something bigger.
Yeah.
Now, there are some programs out there that Trump's talking about where they can keep that current mortgage. I don't know how that would play out. Again, there's a lot of talk of a lot of things happening. I don't know what's going to come through, so I don't really want to talk about the hypotheticals.
Yeah.
But I do think that if we get another quarter point movement, it's going to trigger. And I that could happen next week, right? If you look at where we closed today, it was a good day on the market, right? So it's just a matter of us getting there. But it's been very positive the last 4 or 5 months.
Yeah, I've had clients talking to me for the last 3-4 years saying, we're waiting for the market to crash and still waiting. So I
can't think of a better time looking back, especially in the recent months. This is the perfect time. It is a buyer's market. There is a lot of inventory out there. Sellers are nervous. If it's been on the market, from what I've seen, you get a home on the market over 7 to 10 days, there's a good chance you're going to pay 2 to 3% in closing costs. Unlike how quick people forget, you're paying over appraised value. You're not getting any closing costs. People forget that market, right? And that was everybody's excuse. The market you've been asking for is here, and yet people are still sitting on the sidelines, and rates are good. Yeah. When I started, Jack, in 96 in New York, I was refinancing people from 18% to 12%, and I was a god. And when I got to Vegas, I was refinancing people from 12% to 8%, and I was a god. Yeah. Unfortunately, this generation, if it doesn't have a 3 in front of it, they think they're getting screwed. But to me, if I look back over the 30 years and average the rate that I sold, we're below that rate, right? I was selling an average rate of probably around 6 3/4, I would guess, over a 30-year average. And we're selling 6 1/8 today conventional, 5.75 FHA Obviously, it's depending on the factors, but that's what we're selling.
Well, when it had a 3 in front of it, or even sometimes a 2, people were paying 30, 40, 50, 70,000 over the purchase price to get the house. So I rather get a good deal on the house and then later try to refinance and get a better rate. So it's wild. That's why it's important for somebody to have a solid agent, a solid lender. It's quite a journey out there with all that. But speaking of lending, tell me a little bit about Note Mortgage. When did you open that?
Yeah, so we opened that. It's been we've been live for about 2.5 years. We started looking into this probably about 5 years ago. I partnered up with a guy named Craig Tan and Chris Biaggi. Craig owns Huntington and Ellis. I don't know where his ranking is, but he's a very smart kid.
Yes.
And Biaggi, he's another genius. I mean, Chris Biaggi back in the day, he was cranking out, when he originated, he was cranking out 50, 55, 60 loans a month.
A month?
A month.
Wow.
He's a machine. He ended up buying all Western, let's just say 20 years ago. I don't know what the exact year was.
How long were you at All Western?
I was at All Western, I'd say probably 16 years.
Wow. Okay.
Yeah. And so we partnered up, the three of us, and put together Note. And it's been the 2 worst years in the mortgage business to be in for the last probably decade. Yet we're cranking. We're cranking numbers, and it's been good. Obviously, I want it to be better, but we're very fortunate on how things have been going for us. I've also hired some really, really good people, Jack, right? Mm-hmm. I'm looking at 30 to 35 people before I hire one, where a lot of mortgage companies, if you want to get hired, they're going to hire you. I'm just looking for the best of the best. We're trying to run thin margins. Our pricing is super competitive, but we don't just have loan officers that do a deal every 3 months that bog up the pipeline, right? I've got nothing but professionals. We have 3 bilingual speaking agents, all very professional, very experienced.
Yeah, that's something incredible about Craig, who you mentioned, and you guys just bring on the best of the best, and I think that carries so much weight with clients, that knowing that they're in such good hands. That's a creative name too for a mortgage company.
I actually came up with that. Thank you.
Did you really?
Yeah. Craig wanted to call it Caviar.
Caviar?
Yeah, that was his name, and we came up with a bunch of names, but that was Craig's worst name. And I came up with Note. Obviously,
I love it. I love it.
If you got the title, I thought Deed would be good. And
don't give away names. That's valuable.
Can we scratch that?
Yes, we're going to take that out.
I think Craig bought the domain on it already, and then Note for obviously.
I love it. Reasons. I love it. I love that simple. I don't know. I've been a fan of the name ever since I heard it. So we talked about
wiener dogs.
Yes, we talked about mortgages. Yeah. What do you see the future of the mortgage industry?
Yeah, that's a good question. I don't see a lot of changes coming. I hope not. I think that we're pretty tightly regulated already. I like where we are. I don't see the interest rates changing much over the next couple of years. I really feel that we're going to be sitting mid-5s to mid-6s over the next few years. I don't see home prices crashing, especially in Las Vegas. I don't see it happening.
You don't see a 50-year that they're talking about? That seems like a long time for...
So I don't understand it. I don't know why we'd go that route. I don't know how that would be a benefit to the consumer. Mm-hmm. I think there's better things that we can do besides a 50-year. In hindsight, on a $400,000 mortgage, it saves you a couple $100. So if you're at a 53 DTI, it could get you to a 50 DTI to get you in, but there's other ways to do it as well. You get seller contributions, just buy the rate down instead.
Yeah.
You're paying a tremendous amount of interest on a 50-year. Just doesn't make sense.
Yeah.
I get home ownership, but when it comes down to that, there's just some people that just may have to do a better job of saving money, or looking at checking your price point.
Yeah, and it doesn't even save you that much because you're probably going with the higher rate. And
again, I don't know the concept behind it. If you're asking my opinion, it just doesn't make sense to me. There's better things we can do.
So what do you recommend to somebody? Let's start first with somebody who's looking to buy their first house. What's the best thing to do?
Yeah, I would say just get with a mortgage professional sooner than later, just to make sure you're on track. I always like to tell my clients, I just want to get you on the proper train tracks, right? Everybody's a professional. They bought 2 homes. They know everything, but they don't. and more times than not, you're getting bad advice. And I just think it's important you set the table early and set it properly. So just a 15-minute conversation, just asking general questions, I can find out where we're at without even looking at credit, and give them some decent advice as to what to work on for when they are ready. They're ready to pull the trigger, and they can do the right things in terms of working on your credit, right? A lot of people understand 30% credit utilization, right? If you have a credit card of $1,000 limit, even though you think you pay it off every month, which you probably do, but the credit card statement shows you're maxed out, it's killing your credit score, right? You should never purchase something more than 30% of your limit. So if you have a $1,000 limit, never make purchases more than $300 per thousand. And when you get your statement, pay it off, right? They look at the statement balance. Even though you pay it off, that's not what the statement balance was. So that's a really big issue.
Do you recommend somebody cleaning up their credit or paying things off or doing things before they talk to you? Or should they come talk to you and you'll kind of
I think it's important we have a phone call first.
Okay.
So because once you get rid of your liquidity, it's gone, right? Cash is king. So I would like to make sure you're doing the right things first before you do it. It's a phone call.
Yeah.
It takes 15 minutes. Just make the call. Make sure you're doing the right things.
And is that the same advice you would give to somebody who's bought a house before or currently owns one?
100%. Just because you bought 2, 3, 4 homes, we fund that in a day.
Yeah.
We've seen it all. I think it's important you speak to a mortgage professional just to make sure.
And that doesn't cost anything for somebody to just talk to you and just kind of get advice on what direction they should go in?
No.
Okay. Any other advice you have for people who are looking to refinance, who got a house, let's say, in the last year or two and they're in the 7s? You think they should wait a little longer to get to the mid 5s, or?
I think that the time is here. If we got a couple more days of traction next week, I've got several clients sitting on the fence, and we're probably going to start pulling the triggers and locking in, because there's no guarantee they're going to continue to go.
Yeah.
So it really depends, right? If you've got a high balance, if you got a $700,000 mortgage, it may make sense to refi if you're getting a quarter point benefit.
Just a quarter of a point.
Quarter to half a point. It could be worth your time, right? You got to look at what you really got to look at is what are the costs to do it? What are my savings, and what's the time to recapture those savings? If you're going to sell your house in 5 years and it only takes you 2 years to recapture the savings of the refi, it's going to make sense.
Yeah.
But if it takes you 5 years and you're selling in 2, it's not going to make sense, right? If you got a $100,000 mortgage, you may have to see it improve by a point and a half to rate. It just really depends. There's a lot of factors, which is why it's a phone call. Just find out. Just know that we're going to put you in a good position.
So it's how much is it costing me to do it versus how much am I saving?
That's what you look at.
Yeah.
Time to recapture. Yeah. And how long you'll be keeping the home for. I don't know. Nobody knows that answer, but you have an idea.
So everybody can find you and your team online, Note Mortgage. Dosecki has to change their spokesman. You're the most interesting man in the world. We got a little taste of it today. And I really appreciate you sitting with us and giving us all that great information. Well, thanks, Tim. It was great. Great talk.
Thanks, Jack.